Good morning, one and all. Today I would like to explain about the brief introduction of income tax. What is tax and its requirement? Before entering the taxation, we will discuss about the main important points which are covered in our taxation. Those are assessee, previous year and current year. Assessee means who comes under the category of taxpayer. Those persons are called irrespective of gender assessee. And the next previous year means income earning year is called previous year, and tax pay calculation year is called assessment year. What is tax and its requirement? Tax is part of individual's earnings which required to be paid to the government in order to generate revenue. It means that if any government wants to do any social activity to the society, then they need some financial support. It means that financial resources. Income tax is the one of the best resource to earn the revenue and generate the revenue, and it's a mandatory for every citizen of the country. There are two types of tax in our present Indian scenario: direct tax and indirect tax. In our direct tax, we have two parties involved. Indirect tax, three parties are involved. Income tax comes under the category of direct tax. Why tax is required? Income tax is main income source of the government. Tax money used in initiating various welfare other activities. Brief history of income tax. Origin of taxation in India dates back ancient books. According to Manusmriti, artisans used to pay 1/5 of their profits as tax. They required to pay 1/6 to 1/10 of their products depending upon the circumstances. In Indian in modern India, tax was introduced for the first time in 1816 by Sir James Wilson. Subsequently, another income tax act was passed during 1896, 1918 and 1922. Income Tax Act 1922 was the last income tax act in British India and remained in force till 1962. In independent India, the Income Tax Act 1961, which was implemented 1st April 1962, and it is enforced since 1962. In several amendments of far-reaching nature have been made in Income Tax Act by the Union Budget every year. Now we will be discussing about the capital gains. Before entering the capital gains, we will be discussing how many types of income sources we have in our present scenario. Based on the income nature, we have 5 categories of incomes. Those are: first one is income from salary, second one is income from house rental properties, and income from business, income from capital gains, and income from other sources. These are the main criteria based on the nature of the incomes. Now we will be discussing one small problem regarding capital gains. If you sell your fixed asset, then you will be get profit or loss. These types of profit or loss comes under the category of capital gains and gains or loss. So Mr. Surya Narayana owns a residential house which was purchased by him in 1979 for rupees 1,25,000. The fair market value as on 1,481 was rupees 2,50,000. Mr. Suryanarayana spent 2,86,000 for the construction of two additional rooms in the year 1997-98. This house is sold by him on 10th June 2014 for a consideration of rupees 59 lakhs. On 16th March 2015 and deposited 2 lakhs in nationalized bank under capital gain account. We will be discussed about the solution. Before entering the solution, we will be discussed about the format of capital gains problem. First of all, you write down the title of the problem, and second point is format, particulars, amount in rupees. So particulars, consideration received. Next one is brokerage and transfer charges, and next is indexed cost of acquisition, and next we will be minus our index cost of improvement. So first of all, write down the received amount. When you sell your asset, then automatically you will be received some amount. That amount is called consideration received. Here Suryanarayana, after selling his house, he received 59 lakhs of rupees. That's why consideration received amount is 59 lakhs. Next, minus brokerage and transfer expenses, 1,77,000. So 59 lakhs minus 1,77,000. Then we will be get 57 lakhs 23,000. This is called net consideration. Next, indexed cost of acquisition. Indexed cost of acquisition, it is nothing but the purchase value of your asset. The purchase value of your asset, current market scenario, 28 lakhs 12,500 rupees. Now again, index cost of the improvement. We are adding some. We are providing some additional arrangements of our house renovation. For that purpose, we are spending 32 lakhs 17,500 rupees, 28 lakhs 12,500 plus 32 lakhs 17,500. The total figure is 60 lakhs 30,000. So our net consideration is 57 lakhs 23,000. Our minus value it means cost of acquisition and renovation. Total figure is 60 lakhs 30,000. So our net balance is capital loss is 3 lakhs 7,000. And again we will be adding the exemption under section 5 lakh under section 54, 10 lakhs rupees. So 10 plus 3 lakhs 7,000. Total income from capital gain is 13 lakhs 7,000. So this is the capital gain of Mr. Suryanarayana. Again I will explain you briefly. When we sell our house, we are receiving 59 lakhs. So this is the gross amount of our asset. So 59 lakhs minus brokerage minus cost of acquisition minus renovation amount. Then we will be received final figure, that is called capital gain, 3 lakhs 7,000. So again we will be adding the exemption under section 54, 10 lakhs rupees. 10 plus 3 is equal to 13 lakhs 7,000. So this is the income from capital gain of Mr. Surya Narayana for the assessment year 2017 and 18. Now we will be discussed about the working notes. Selling expenses 3% on received amount. So our received amount is 59 lakhs. So 3% means 59 lakhs by 3 by 100, 1,77,000. Now next one is calculation of index cost of acquisition. As the house was purchased on 1st April 1981 and we are innovation year is, our innovation year is 1997 and fair market value is 2,50,000 and our actual cost of purchase is 1,25,000. So if you want to calculate the original cost of your asset is present market scenario, you have one formula: original cost of acquisition into previous year index number divided by present year index number. So then you will be receive the cost of consideration received amount, cost of acquisition. Now next we will be discussed about the calculation of index cost of improvement. Now exemption amount under section 54. So if you want to calculate the exemption amount, we will be discussed about the least amount of first and second options. First one is cost of the new asset plus amount deposited in the bank, and the second one is capital loss amount 3,07,000. So the least amount is 10 lakhs. So then 10 lakhs and 13 lakhs. Least amount is 10 lakhs. So we will be received 10 lakhs amount as the exemption amount under section 54. Then our total income from capital gain is 13 lakhs 7,000. Now we will be discussing about our second problem. Ravi Kishore sold a plot of land in Hyderabad on 15th September 2015 for rupees 18 lakhs 50,000 rupees. 50,000 rupees on the brokerage commission is 1.5% on sales price. The plot was received by him on death of his father on 15th February 2002. So then his father acquired on 5th May 1975 for rupees 1 lakhs and its fair market value on 1st April 1981 was 1,20,000. Purchased National Highway bonds, National Hindustan Air Wing bonds for rupees 2,50,000 and rupees 7,50,000 is used to buy residential house compute income. So this is the basic information regarding this problem. Based on this information, we will be calculate the income from capital gain of Ravi Kishore for the assessment year 2007 2017 and 18. So here also first of all we will be write down the title of the problem: computation of Ravi Kishore's income from capital gain for the assessment year. And the second part of the problem is format, particulars, amount in rupees, consideration received, selling expenses 1.5 percentage, and then we will be get net consideration. It means that first of all we write down the consideration received, 18 lakhs 50,000. Then we will be calculate the selling expenses percentage, that is 1.5 percentage on 18 lakhs 50,000, 27,750. So 18 lakhs 50,000 minus 27,750, net consideration is 18 lakhs 22,250 rupees. Then again, we will be net consideration less index cost of the acquisition. The original cost of your house present market scenario is called index cost of acquisition. Cost of acquisition is 10 lakhs rupees. 18 lakhs minus 10 lakhs 80,000. Then we will be get the capital gain 7 lakhs 42,250 rupees minus exemption under section 54, NHI funds under section 54 is, and the next amount purchase 54A 3 lakhs 5. So 2 lakhs 50,000 plus 3 lakhs 5,000, total 5 lakhs 55,495. Then finally our income from capital gains is 1,86,755. This is the net capital gain of Mr. Ravi Kishore for the assessment year 2017 and 18. Now we will be discussed about the theory question on capital gains. Capital gains introduction, meaning, scope and basics of charges. Define capital gain, state its scope and basics of charge. Capital gains refers to profits which is earned from the sale capital assets. Capital gain, it's the year other than the year in which capital asset is transferred. However, in some cases capital gain may also arise. There is no transfer of capital asset. There are two types of capital gains. Those are based on the duration period. We will be divide two categories: long-term capital gains and short-term capital gains. Long-term capital gains, as per section 2 subsection 29b, any capital gain arising from the transfer of a long-term capital asset is referred as long-term capital gain. Long-term capital gain, it will be taxed at 20% flat rate. Now second is short-term capital gain. In shortcut we will be says that it is called below 1 year. Capital gains is called short-term capital gains as per section 2 subsection 42b. Any capital gain arising from the transfer of short-term capital asset is referred as short-term capital gain. It is taxed on sub basis, and it is included in the total income under income from other heads for income from house property, income from salary, etc. Scope and basis of charges. The scope and the basics of charges in capital gain is based on certain conditions. The following are the conditions we must to required to change charge income under the head capital gain. There must be capital asset. There must be transfer of capital asset in the previous year related to the current year. On transfer of capital asset, there must be profit or loss. Now we will be briefly explain about the permanent account number. It is called PAN number. Each and every taxpayer must to have one PAN number. Thank you one and all.